Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, January 8th, 2020. What I want to do is kind of keep it consistent here. I'll follow up to the asset classes, the various indexes, bonds, gold, natural gas, Bitcoin, everything I covered yesterday. I never got a chance. As I said in that video, I was trying to keep it under 30 minutes, and so I had to cut it short and not cover oil and coffee. Those were the only other two things I was going to mention. Well, I'll do the same. We'll hit it all today, but it'll be a lot quicker since we just did an update yesterday. There's no reason to talk 5 minutes on any one security, so I'll go through this a little quicker. Markets are moving fast, so there's some things worth noting. That's why I'm doing a follow-up video. And maybe I'll hit on the BYND Beyond Meat trade, since that was something relatively new and that one's been moving lately. So let's just dive in, start out with the equity markets. Again, no reason to spend a lot of time because I posted extensive updates since yesterday, including the video. And you can see, actually, I just noticed something. There was a downtrend line I had right there before. It was taken out right there. If I extend that downtrend line, look where it comes in. Boom, right to the key 211.42 support. That's why it's been color coded yellow. Again, that was a level we need to see taken out. Last night when I posted it, said a reaction off that level is likely, and you could reverse it and go long for a bounce. I didn't think the bounce would go this far. I'm going to start out by just saying I am very surprised at the resiliency at this point of the market, despite the technical posture. With that being said, I did the screenshot today of a comparison back in early, you probably already saw that one, but back here in the spring of 2019, and you turn everything off, and you can see, that was, you had what I call regular volatility. This is what I refer to as regular volatility. These back and forth moves, decent sized candles, and then you can see at this point right here after that correction, that little correction, starting with the intraday ranges were very, very tight, usually 1% or less. And volatility started perking up there. It was a green candle, but it was a big green candle. And you can see that's when volatility expanded noticeably after an extended period of low volatility. And all along, we didn't have low volatility like that. You can see these are, bigger, what I call more normal candles until right here. So that was it. And again, I covered that on the front page, so I don't want to spend a lot of time. So I'm still viewing this as a very similar period where volatility has expanded after a similar period of extremely low price compression. The market was going up. Don't mistake volatility. It's often equated with a correction, but I'm talking about price volatility, intraday price swings, daily swings up and down, as well as intraday. And again, that's what we've had. So. And where I'm going with that is this move, including the, roughly 3% rally off the, the lows last night. You can see a, strong comeback, is kind of par for the course once volatility starts to expand. So, once you come out of a period of low volatility, as I said, things can happen quick and you get the bigger movements. And from a technical perspective, again, very resilient and somewhat surprising rally right there. But like I said, it really hasn't changed anything that I've been highlighting here. We had a divergent high recently, and we're still diverging with this marginal new high. Like I always say, divergences aren't sell signals. What are sell signals? Well, sell signals are a break of support, a solid break, not a momentum-fueled overshoot. Like I said last night, when you're heading down on the near vertical plunge, I would almost put good money on in favorable odds, better than 50-50, that you're going to have a momentum-fueled overshoot because of that velocity, coming down into a support level. And that's what happens. So that's still the level. I'll still leave it yellow. We still need to break to 1142 to open the door to a deeper correction. Right now, we've made a marginal new high, but again, the divergence is still very much intact. So that's it. Let's see how we close the day. Let's see how we follow through tomorrow. If we can just keep grinding higher and these divergences go away, that will change the technical posture. It's that simple. As of now, the technical posture of the market is, intact and or relatively the same. And if I take away all those lines that I just had here, we can draw what appears to be a megaphone pattern right here, or we call an ascending or a broadening wedge. This one's really an ascending broadening wedge. Looks like that. A broadening wedge or megaphone pattern looks like that. And you have prices in here, and after an extended uptrend, it is typically a bearish pattern. So, downside break of the pattern is roughly coincides with that level I just showed you there again. So that's what I'm watching on the equity markets, and time permitting, if I can cut the video, get it under 30 minutes, I'll loop back because I really want to show you all the FANG stocks, not just Apple, but again, I'll point at Apple. Last night it broke down in the after-hours session, but this shaded box, I think you can see the shading on my chart. As I said, that was after hours, and last night I said we'd have to see what happened in the regular session. After hours, you always want to take things with a grain of salt, and and you want to see those breakdowns during the regular session. So when the futures reversed last night, it put Apple right back up and opened back up into the price channel today. But look where it is now. It's back testing. So I'll say this as I do the video right now. I think that's an objective short entry. I've talked about this before. Doesn't promise it'll pan out. But the midpoint of a price channel like that often acts as support or resistance when tested from above or below. Sometimes you'll crawl up a little bit. Maybe you take it out. That's why you have a stop somewhat above there, and you'd short down. And again, based on how long in the tooth this price channel is right now, how long it's been forming, as well as the technical posture, the recent divergent high. That this high right now, I've marked this up like crazy. Probably losing you here. Let me just show you this right here. Again, that's a marginal, a very ever so slight high, less than probably 1% above the previous high right there, fraction of a point, and it is still very much. In fact, the divergence is only steepened now. This is, the slope of this divergence line here is even stronger than it was at this recent high right here. So there it is. Yes, a very impressive rally off the lows last night. But again, if anything technically had changed, I might back off and say, all right, well, maybe we're going higher. And hey, that is possible, but I don't think so. Let's move on now. And again, maybe I'll cover the FANGs in a separate update. Oh, the other thing to watch on Apple, just like the index, is that PPO signal line. Look at it coming up right on the zero line so far, keeping this trend indicator. It's a white line, the last of the two to cross, that dotted line, the 9 EMA, and it said so far Apple's in a bullish trend. And again, absolutely zero sell signals. Imagine that was a circle. Zero sell signals, because this happened in after hours. We did not gap down or break down today, and so you want to look for that there, but we are at resistance. So let's see what happens with Apple. And of course, I keep harping on Apple because it is the single largest component in the NASDAQ 100. Okay, moving on to, let's do Treasury bonds. I think that's the order I covered yesterday. TLT. I made it clear in the video yesterday, I don't have a strong opinion nor a position in TLT. Said, based on the daily chart, and somebody even asked that. Yeah, based on the daily chart, the posture was a precarious or more of a bearish technical posture, because we had broken down below this triangle pattern here. If I can grab my line tool, there it is. You had we're below that trend line and back testing the primary uptrend line as well. So you break down back test, and that put it bearish on the longer term. But again, I still don't have a very strong opinion. Now, Treasuries are down today, almost certainly because the stock market is rallying. Treasuries are a risk on, risk off, or they are a risk off asset. So when the market drops, they tend to rally, and vice versa, hence the drop. And as I mentioned, the technical posture right here, since this bearish crossover on the PPO, that trend indicator has been bearish, failed on the back test of the zero line there, and we're still below it there. All along this point, it said Treasuries were in a bullish trend when the 9 EMA was above, and bearish trend here. So that's that. And then I also showed you on the 60-minute chart, recent bullish development and a potential bullish setup. If I can find that, that would be, I'm looking down below, and I need to find ZB, I've got it here somewhere, guys. There it is, ZB. I mentioned, you could take a shot at a pullback at 157.055, but we broke that. So really no reason to stick with it now. If it regains a level, great, but that was support, and it has been taken out today. It was a pretty decent support. So you can also see I've added that high yesterday ended up being a divergent high so far. And really, we can back test that support doesn't come in for a while. There's minor support levels, but the big ones that stand out are these recent lows right here, here, and here, and here, as well as a back test of the downtrend line. Those would probably come in together if we zigzag down here. So that's it. So again, I still don't have a strong opinion on where that heads, but if and when we get sell signals on the market, I would suspect that we'll have a rally in Treasury bonds, but we're not there yet. Oh, and before I forget this one, I told you I'd update BYND just because it was an active trade yesterday. Hit our first target right away. I have the pre-market trades turned on here. We came within 23 cents. We had a high of 90.10. I think that was right there. Yep, shows me 90.10 versus that first target of 90.33 in pre-market. Look, I just want to say it still looks good. We just slightly missed in pre-market. The official trades, I've always had just kind of a standing rule where I'll only count regular session trades. I know a lot of traders or those that come into the site are relatively new to trading, might not understand how to put in order how pre-market and post-market trades work, but I'll just give you a quick tip. I've shared this many times over the years. In a trade, first of all, I'm a big proponent of OCO orders. I've talked about them many times. You can use the search function on the site, that little hourglass, or search, magnifying glass, search icon, and type in OCO or OCO orders. It's one cancels the other. Best thing since slice bread, especially for a trader that doesn't have time to be in front of the screen, computer screen all the time. And simply what you do when you go long, let's say you bought the stock yesterday on the breakout, and you're targeting, let's just say T2. That's your preferred target. You don't want to hold out for T3. You want to go for T2, and you want to have a stop, let's say, because you're going there, maybe a little bit above the stop that I suggested. So what you do after entering the trade, you simply set a good to cancel, very important, not a day order. Usually your broker the default will be a day order. It means it expires at the end of the day. Select good to cancel, sell limit order. Sell your shares. If you have 100 shares, sell at 90.33. And now the thing is, most brokers will have, you may have to go into conditional orders, a little checkbox, and to set that order to allow it to be filled outside of the regular trading session. And again, every broker might be different. If you check that box, that order, now it didn't hit 90.33 today, but if it did, it would have sold you out and booked your profits before the market even opened. Now, on the flip side, see, the goal on any trade that I make, I don't want to be stopped out, and I do want to hit my profit target. So since after-hour trading is kind of like the wild, wild west, like I said, take everything you see in the after-hour session with a grain of salt, because the big institutions aren't in there. They cannot maneuver in the after-hour session. There's not a lot of liquidity, or the pre-market session, and you can only use limit orders to buy and sell, no market orders, so the volume is a lot lower. Now what that causes are some pretty good price swings. Now I like to use those swings to my advantage to get me out of a trade if that's my target, but I'd rather not be stopped out. So when I do the OCOs, if I'm going to use those, especially if I'm away from my desk, I will set the sell limit order to fill outside of regular trading hours, and I will set the stop loss order to not choose that selector, so it will only fill between 9:30 a.m. and 4 p.m. Eastern time. So just a little takeaway there. And looking at the chart, let's turn off the after hour trades. It still looks fine. Let's go only outside of market hours. And look, still looks constructive. The breakout's intact. Trend indicators are constructive. Might need to give this one a little room. Hey, the markets are defined technicals so far. Trend is up. And this also, this one's not in the S&P 500 or the NASDAQ 100. It's a small cap. It may be in the Russell 2000, I believe. It's owned by quite a few small cap funds, but that's about it. So it can march to its own drumbeat. It may not come under selling pressure forced if we get a downtrend and we get kind of a broad-based sell-off. But either way, as of now, it looks fine, but like any trade, it's up to you. Raise your stops to protect profits, depending on what you're holding out for, and I'll do an update if I see anything, significant to update on it. All right, next up, I already hit on. Nope, I didn't hit on gold. I covered Treasury bonds. Okay, gold. Had another question on today. Yesterday, well, going back, just to recap in case you didn't catch yesterday's update in the video, I said this was very bullish. I gave it almost a 10 on a scale 1 to 10. For months, I had been, saying my expectation was this right here was simply a consolidation and an overdue or an expected correction off a divergent high and extreme overbought readings, just like this one here within a bull market. So you have nothing goes up forever. Even in a bull market, you have your bull market corrections along the way, and then you break out and you have the next leg up. And so the impulsive nature of that, not only the fact we broke out, but we had an impulsive run, helps to, certainly in my opinion, helps to strengthen the case that I am correct that this is, most likely the next leg up in a new bull market. However, work to be done. I said before we even broke out that we'd have to contend that's a major reaction high. That is resistance, especially when you hit it very extended and overbought. We were extremely overbought the other day. We broke out above it on Monday, traded above it on Tuesday. We're still on it now. And we have one of the most overbought readings that we've had in a while. Now, the good thing about overbought, I'm assuming if you're long and bullish gold, in a bull market, overbought can become more overbought, or you can get these extreme overbought readings. You get a little bit of correction and mostly in time, more so in price, and then the uptrend resumes. So if this is a bull market, then not a big deal. And also the other thing is you don't see extreme overbought readings like this in a bear market. That is another additional evidence, in my opinion, that we are in a bull market in gold, because when you go back and enter the bear market, you don't see those extreme readings. Only once this bull market started, that was right here. This was the low right here. Here's the beginning of the bull market in gold, the end of the last bear market, which was in December 2015. Since then, gold has been in a bull market. And again, it's indicative to see extreme oversold readings in a bear market, but you rarely get very deep or extreme, meaning well above that red line, the 70 level on the RSI. Those come again in bull markets. So now, because you're overbought, may need to work that off. You may have more of downside. Maybe this is just a consolidation, maybe a little flagging action before the next leg up. I think it'll depend largely on what the stock market does, because gold is a risk-off asset. If the stock market continues to power higher, burns through the divergences, that would be a headwind for gold. It doesn't necessarily mean gold will drop. Gold sometimes will rally when the stock market rallies, but again, it doesn't help. No, what would help the next leg up would be a correction in the stock market. So there it is. And again, we hit that level. I said it yesterday that this was quite likely or may prove to be a momentum-fueled overshoot, and so far it was, because as you can see, we overshot the 146.95 resistance level, and now we're back a hair below it, kind of settling in on it, and that's exactly what a momentum fueled overshoot is all about. I liken the analogy of a baseball pitcher throwing a 90+ mile an hour fastball. It's going to hit the catcher's glove. His glove isn't going to remain in place. It's going to snap back, spring back, and then spring back forward, and that's the momentum fueled overshoot right there. So like it's near term where gold goes, I don't have a very strong conviction, because I need to see the sell signals on the market. It's like I said, overbought. It's not the most objective time to chase. This was a breakout. That was an objective long. Maybe a pullback or some consolidation. Start to see the next leg up. That might be a decent time to add to positions as well. Okay, I'd be remiss not to follow up on Bitcoin. A lot of buzz on that lately. Well, remember yesterday we hit the downtrend line. This is a primary downtrend line, on the daily chart. It is also that downtrend line on the 60-minute chart, where I mentioned you could take, certainly take profits there. Initial profits, I set a second target a little bit above that, but we've hit that, and we've had also a little momentum fueled overshoot today, But again, this is a daily candle. Yesterday we closed right on the downtrend line, and today we're having a reaction off it. I view that as perfectly normal and expected behavior. Rarely, very rarely will you come off if you're in a wedge type pattern, or you have a downtrend line that's fairly well defined, and you're coming off, in a pretty sharp move off a divergent low just to get there, you usually don't go on right on through there and break out. What happens? You get a reaction, could be a consolidation, could be a pullback, or a combination of both, and then it helps work off the near-term overbought conditions, and then you go on to break out, hit the next targets. So, as of now, hard to say how much more downside, but we are at support. When I look at the 60-minute chart here, here's the official trade. There's that same downtrend line. You can see a little bit of an overshoot today. And look, boom, right back to the first target. Remember, I had a first target was set right under this, right around this, what I call support zone, 921. I have a support zone. You can see my lines. Remember, I always set the targets, price targets on my long trades slightly below the actual resistance level that I expect a reaction. And if you can see as I hover on this line, it shows it at 922.36. We'll round that off to 922, so you can see I had it a penny shy. We hit that target right away, right after the breakout. Top of the resistance zone was about 932, and there it is. So we pulled right back to the bottom of the zone. Little momentum fueled overshoot. It's also a big gap in there too, and so far we're holding that level. I can't promise it'll hold, but I can say I think this is an objective long entry or re-entry for those that booked profits recently on Bitcoin with a stop somewhat below. Where are your support levels? If we go below, well, you have the bottom of the gap to fill. And again, you're looking at, this is GBTC, so these are the regular session trades. We'll look at Bitcoin futures here in a second, but there's a gap right there. Remember, this was sort of bull flagging action with an impulsive leg up, little flagging action, and the next leg up, which pretty much hit that measured target too of the flag. You can see this is this right here to here is a flagpole up to the formation of the flag, and then you take that flagpole, add it to the bottom of the flag, and gives your measured target. So gap support number one, the bottom of the gap. We're at the top of the gap now. There's another gap right there. And so ideally, I'd want to see Bitcoin hold up here. It's pretty decent support on GBTC. So yeah, that's my thoughts there. Goes down below there. Not going to completely wreck the longer term case, but again, it would be preferable to see a reversal here. And if we drop much lower, and obviously, each and every level, if you break each and every support level, it starts to chip away a little bit at the bearish case, or the bullish case, I'm sorry. That would be the bottom of the gap, and then, of course, a gap right here. And then that 864 support, that's where we entered. And that really, ideally, we need to hold above there. Otherwise, we may make another run, and we might have another divergent low. So that's it. So still an active trade unless you took profit. It's an active trade until it hits the final target, or I decide to pull it out early, or it gets stopped out. So I'm leaving the stop in place for now because that stop was based on our entry price and those targeting that final target. So there's no reason. But there's nothing wrong with raising stops at this point to protect profits if you're in that one. Let's look at Bitcoin futures, BRR. We're coming up on, I had added a trend line to this chart here. It's the 60-minute chart of Bitcoin futures. There's an uptrend line. About the 8,000 level is a pretty decent support level, and that's just below. So I'd really like to see it contain here. And again, you can make the case for an objective re-entry or new entry here on the pullback to the trend line, and or down to that 88,000-ish level, but not too far below. I would have a stop somewhat above here. That would, by the way, 77.54 if we go lower, also an objective entry. I'm okay with it coming down to here, but that's a pretty decent, it was former resistance, now support level. So that's where I would really be concerned if it goes much below 77.54. And it almost goes without saying, with GBTC, Bitcoin Trust down over 8% today, you're all but guaranteed to see Riot and the Overstock and the other proxies go down as well. This one's been leading to the upside. It goes up more every day, or it has recently since the breakout. Likewise, you can expect it to go down more. That's what you call a higher beta. If you're beta against a benchmark, usually you hear the word beta, and that's the beta of a stock is how much it moves up and down relative to its benchmark. A lot of stocks, stocks like Apple, for example, would be benchmarked against the S&P 500, for example. So a beta of 1.0 means it moves perfectly correlated with its index. Riot has a higher beta than Bitcoin. It's going to trade along with it. Just like GDX or the gold mining stocks have a higher beta than gold itself. They follow gold, but if gold goes up 10%, the gold mining stocks will go up 15, 20 or more. So you get that too. So it's perfectly normal that Riot's down, and in fact, a great buying opportunity. Doesn't guarantee it'll pan out, but it pulled back right to that 130. Remember, that was our breakout, 130. You could step in here. We're at 134 now. Still a buy right now. An objective long entry with a stop somewhat below. Depends on, you want to allow for a back test. You could run a very tight stop. I wouldn't put a stop at 129. You got to give it a little bit. They're going to run, especially on a volatile stock, they're going to slice through. You get those momentum fueled overshoots above and below support and resistance. The low today was 129. I mean, you could set it at this point just below that if you wanted a really tight stop at 128. Since we already tested that level, wouldn't be so hot to see it hit that again. So again, go long here 134 with a stop at 129. You're risking 5 cents to make, let's just say, if my next target at 181 is hit, grab it close enough at 135, measuring up to 181, well, 182, that's the same thing, 36%. So you're going to risk 5 cents, or what is that, about 4% or so, to make 30+%. That is an excellent risk-reward ratio. Again, the trade may or may not pan out. You never know. Nobody has a crystal ball. But if all you can do in trading is put the odds in your favor and take objective entries, long or short, and with favorable risk-reward ratios based on your price target to your stop, and you're going to win some, you're going to lose some. But if you use attractive risk-reward ratios, you can bat less than 500, meaning you don't have to have a 50+% win ratio, success ratio to make money. You do if you're only using a 1-to-1 risk-reward ratio, meaning you're risking $1 to make $1. So keep that in mind. Now we'll go to Overstock. Expect more of the same there. Down today again, pretty much effectively hit our first resistance zone. I didn't have it as an official trade, so it doesn't say T1 equals. I had a resistance zone there, and we reversed just shy. That's why if you had a official price target would have been set a little below 897. And again, it's pulling back, but it already had a pretty good reversal yesterday off that level, so you can see it's actually holding up pretty well, only down 2.73%. Again, because it already gave up a little yesterday, whereas Riot is now Riot was up yesterday, so that's probably why that one's down more. Uptrend line right here, if you're in it, there's a stop 1 under that level and stop 2 below 716, a little bit below it. An ideal scenario would be for it not to get back there, but again, that's levels to watch. When I zoom down here to the 60-minute chart, I see what could be, it's a little sloppy for a bull flag or a bullish pennant, but you do see some mid-level consolidation after an impulsive leg up, and so for all intents and purposes has the same net effect if we can break out to the upside impulsively, and that would give your measured target about the length of that flagpole there for your next target. And that comes in well, look, right around here. See that big old gap right here? So that would be a target up there for Overstock about 950 or so, and it's a little bit above what I have here, so keep that in mind. That would be right about there. So this is a daily chart, by the way. The one I was just on was a 60-minute chart. All right, I told you we would get, that's the dollar. I'm going to skip for now because we're running out of time. I wanted to keep this one under 30 minutes. I told you I'd update the same things, which was natural gas as well. Where is that? NG. Here's my NG chart. Looks like a little false break. Tried to pop, and it was not impulsive, and I don't even think we had a 60-minute close above there. So, yeah, we did, but not very impulsive. So it tried to pop above that level. You can see a couple failed attempts. That's a false breakout, and then we're back down. So, again, it needs to clear this level, and because we've already had a couple false breakouts, to play it safe now, you want to wait for that recent reaction high there. And everything else, we still have the bullish divergences intact. At least at this point, we had a divergent low. We're still, above that low now, so we are in a near-term uptrend. there's a price channel, and you can look at it this way. I just drew the two lines. What you can do, it's early makings of a price channel. We don't have a lot of reactions, but you can go long at the bottom of the channel and ride it up to the top of the channel and trade off that as long as that channel continues there. And finally, update. I posted an update on crude on the front page. I just wanted to get to that because this is one of the ones I tried to get to in the video yesterday. It ran too long. Last updated here on January 3rd or whenever it was right here. We've been building these divergences. This was a little pop last night on the Iranian missile strike, and traders just they're fading it. They're not. Risk has just left the building right now in the market. So they got the initial pop, but look how hard they sold into it. And again, what it is, it's a case of news. There's a news-induced spike, but then the technicals prevailed. You had these divergences, negative divergences building now for months. And crude's come down and hit my first target. I expect a reaction. We got a reaction. I mean, if you really want to zoom in, it wasn't much. It wasn't a bounce. I define a reaction as a bounce and or a consolidation. So you can see we hit there, little bounce on that 60-minute candle, and then boom, we broke it with a solid break and solid 60-minute candle that took us all the way down in one fell swoop down to that $60 target, which at this point I think that's a momentum fueled overshoot. Like I said, I have next target is 59.68. Maybe we go there. This is not going to be good for the stock market if we continue to drop like this, because the energy sector, even though it's not a very top-heavy, it's not a top-heavy sector, the S&P 500, but it's not going to be good for the energy stocks. And so that's still my ultimate target down here, about 58.69, and it comes in together with this uptrend line right there. So what I expect, we're pretty darn oversold near term. You're deeply oversold right here. So probably this is probably a momentum fueled overshoot, maybe some consolidation or even a bounce. I would say you could maybe take a shot here if you're an aggressive trader. You like catching falling knives. Go long here, 59.78, ride it up to just below that 61.17 resistance if you're not stopped out before then. Let's see, I need to add a line right here as well. Possibly you go that high. You can maybe either trail stops or just get out there and then maybe reverse down for the next leg down here. That's all active trading stuff. But like I said, that's some pretty nasty price action. And, things can happen fast in the stock market. Things can happen fast in crude oil. That's what's happened here. And I would not be surprised to see something similar like along these lines in the stock futures in the coming days to weeks based on the technicals here. Okay, guys, just over 30 minutes. I just hit the 32-minute mark. We're going to wrap it up here. Like I said, I covered everything I covered yesterday, but the dollar, nothing major to report since yesterday on the U.S. dollar anyway. So that's it. We'll get this out to you, and if I see anything else that stands out, I'll let you know. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.